Shares of TD are down big after it was fined $3 billion after pleading guilty in a money laundering case in the US. So it's the largest fine under the country's Bank Secrecy Act. And I'm going to take a look at what it means for the stock and whether you should consider investing in TD right now on this latest sell-off. If you like this content and want to see more of it, check out smartstocks.ca and also be sure to subscribe for more of these types of videos. So the big thing you need to know, well, two big things are obviously a $3 billion US fine. So that's pretty sizable, obviously, even for a bank of TD size. And the other one is that there is going to be limits on its growth in the US, right? And so this could affect its growth in the US for a few years. And TD is one of the larger banks in TD in terms of its asset size, so the top 10 actually. So right up there with all the other big names, include Capital One, Goldman Sachs, US Bank, Citibank. So it's a pretty significant player in the US banking industry. So the big impact is that, in the short term, it may not be generating a whole lot of growth in the US. Now, I'd counter that and say that, okay, this is at a time when economic conditions are kind of slowing down. There's concerns about a recession happening. So even if TD is limited in the number of branches it can open up or how much growth it can try to achieve in the next few years in the US, it may be at a time when economic conditions aren't ideal anyways. So growth may be difficult for banks in general to generate in the US in the short term. So it may not have as devastating an impact on TD as it would have if the economic conditions were much stronger, much more favorable. So I'm not too concerned about that one. I mean, TD is obviously going to spend time restructuring its business, improving its operations to make sure that it addresses the issues, puts tighter policies. I mean, the same sort of thing that you kind of expect to see with any big corporation. Once they get fined, it's like they promise to do better, and so on. And this fades more into its history. Even though it's a bad fine, I don't think it's going to cripple TD by any stretch. I mean, it's a pretty big bank in Canada and in the US. It's not going out of business anytime soon. And if we look at TD's earnings numbers, the quarterly numbers, so these are in Canadian dollars and the fines in US. So $3 billion US. So that basically wipes out more than a quarter of profit for TD, more than that. So this past quarter, they had a $250 million loss, which is unusual for it. And that's because they've already sort of baked in a provision for that. So August 22nd, they released their results and they said it included a $2.6 billion provision for investigations related to the bank's anti-money laundering program, and includes the estimate of the total fines related to this. So it looks like they underestimated that a little bit. So what I take from that is that Q4, there's probably going to be more of an adjustment just for that, to correct that. So it could be another soft quarter for TD in Q4. So I think they'll probably get back into profitability, but it'll be lower than the previous ones, just because if they're normally at around 2.7 billion Canadian, maybe that's around 2, maybe under 2 billion. And plus, in the longer term, if they're spending more money on restructuring and putting better policies in place, that can also limit their earnings. Plus, you factor in the possibility of an economic slowdown. And yeah, the next few years could be a bit light for TD in terms of earnings. So if your focus is on the short term, then yeah, you could make the case that maybe the stock could struggle a bit more. It's already been falling on this news. So this is the TSX price. So if we look at the past 3 months now, it's down 3%, and it was doing fairly well, up over 86, around $87 Canadian, now down to 77. So a pretty sizable drop off on this. If we look at the 5-year trend, this is right around where it was trading in February 2021. So not as low as the COVID lows, but still a fairly big drop for the stock. Right now trading at 18 times earnings, but this PE multiple could worsen as the company's results deteriorate a bit. The one thing that's really attractive though is that yield almost 5.3%. So I think if you're looking at the long term, I think TD is still a potentially good value play, just because these kind of results or this kind of news can seem devastating when it happens and that the company is in really deep trouble. But realistically, unfortunately isn't new to the banking industry. A good example is Wells Fargo. It was involved with fake accounts back in 2016. Stock nosedived, and then it recovered. And the bigger impact was actually the COVID crash of 2020. But as you can see, even if you bought back in 2016, around the time when it had that bad news, you'd still be up ahead. And if not for the pandemic, the COVID crash, potentially be even higher than it is now. So banks can and will recover, especially if they're the big ones. They have a lot of assets. I mean, not to downplay the significance of money laundering fines and things like that, but TDs, this is unfortunately not unusual for big companies to be involved in, where they've had policies where they may not have been optimal, and so they have to spend time to clean up their act, clean up their business, and do a little bit better. So I think it's a good opportunity if you're looking for a stock to put in your TFSA or to hold on for the long term to buy TD. I'd specifically be looking to see if it gets down to these sort of COVID lows, down to less than, let's say, around $60 mark in terms of stock price, and if its yield gets up to around 6%, that might be too good to pass up, just because TD's been paying dividends for well over 100 years. It's one of the most stable stocks you can buy in Canada and probably in North America as a whole. So while this bad news may seem bad right now, in the long term, the bank's still going to be able to grow in Canada, and over time, as it cleans up its procedures, I think in the US it'll get back to growing as well. So there's always a tendency for investors to panic in the short term and then forget about these things in the years ahead. So I wouldn't be too concerned about TD, especially if you're buying and holding for the long term. If you're obviously trading in the short term, it's a different story, because often what I've noticed is, when there's bad news, the first few days of a drop may not be the end of it. It could continue to fall down in the weeks ahead, in the months ahead, maybe, as people get a bit more concerned about it. Analyst downgrades come into effect. So I wouldn't be surprised if it still slides a bit further down, which is why I'd be looking to see, if it dips below 70, that might be a good price. If it gets to around anywhere in the 60s, I think would be optimal, just because to get TD at a yield of more than 5% already is kind of a great price for the stock, just because you're getting that high payout. There's a lot of bearishness already priced into it, and especially if you're planning to hold for the long term, I think it's still a good buy. This news, people forget about it over time. It's concerning. It's a bit of an issue, but it's not something that TD can't fix, can't overcome. Its earnings are really strong. It'll put in better policies and it'll address these issues. And I'd be surprised if it was really the only Canadian bank that's been doing stuff that it shouldn't be doing. It's just maybe the first big one that's been caught with this sort of stuff. So overall, I still think TD's a good buy for the long run, and especially with that high dividend yield, I think it's worth buying and holding for sure.